Now let's revise time of supply. Now, time of supply basically helps us to select a date based on which GST is payable to government. So, in a business, there will be multiple transactions and multiple dates. There will be date of invoice, date of receipt of payment, date of completion of a service, date when a particular transaction is executed, date of placing the order. So there will be multiple dates. Now the question is, based on which date will we derive time of supply, and based on which date will we pay GST to government. This is provided in time of supply. We are going to focus on three sections: section 12, section 13 and 31. Plus, additionally, there will be one section 14 which talks about cases where there is a change in rate of tax. Now, section 12 deals with time of supply for goods. Section 13 deals with time of supply for services. Section 31 deals with time limit to issue invoice, and section 14 deals with TOS in case of change in rate of tax. So these are the topics which we need to recall and summarize. Let's start with 12. Now 12 deals with time of supply for goods. There can be forward charge, there can be reverse charge, there can be continuous supply of goods. And then you have some points like interest, voucher. Now let's start with forward charge. See, forward charge, the time of supply is invoice date or due date to issue invoice, and there was a date of payment here, which is date of receipt of payment. Why are we saying date of receipt of payment? Because in forward charge, who is responsible to pay the tax? The supplier is responsible to pay the tax, and hence we are talking about date of receipt of payment. And then obviously whichever is earlier. But the industry was not happy with this date of receipt of payment, saying that when a particular person is dealing with various types of goods, there will be different GST rates, and if he receives an advance, it was difficult for him to apply a particular GST rate, and hence they requested that this DOP should be deleted. This DOP was deleted via the notification, that is notification number 66/2017. So at present, date of receipt of payment is not applicable as time of supply for goods forward charge. However, there are two exceptions where DOP is even today applicable. The first one is composition dealer, because a person who is under composition scheme, it doesn't matter whether it is which product which he is selling, because the rate remains constant. As the rate remains constant, composition dealer has to use date of receipt of payment to derive his time of supply. And the second case is specified actionable claim. Even in specified actionable claims, date of payment is considered. Now specified actionable claim meaning betting, gambling, lottery, online money gaming, horse racing, casino. In all these cases, DOP is even today considered as time of supply. Then the question is, what is this due date to issue invoice? Now due date to issue invoice can be of three types. Say suppose a supply involves movement. Now, if the supply involves movement, then the due date to issue invoice will be date of removal of goods. Whenever the goods were removed, that is used as a comparable, because section 31 says that you should issue the invoice before or at the time of removal of goods. So if you delay it, then the removal date will be considered as time of supply. Then the second case is if the supply does not involve movement. Now, if the supply does not involve movement, then instead of removal date, we use date of making available. Meaning, when the goods were made available to the recipient. Making available is not just making it ready. Making available is giving him the rights to decide upon where he has to take these goods, how he has to deal with the goods. All that is the factor where you have actually given the title or ownership to the other person, and now he will be responsible for the risks and rewards relating to that particular goods. And the last one is sale on approval basis. Now, sale on approval basis, date of acceptance, or the law says 6 months from date of removal of goods. Here there is a time limit put, because if the goods are not removed within 6 months, not accepted within 6 months from the date of removal, then the time of supply will arise and the taxpayer will have to pay the tax from his pocket. Coming to RCM. Now, RCM, the law is very clear that in case of RCM, we will use date of receipt of payment or date of payment. What will be the language? See, in RCM, we are looking from the angle of the recipient. As we are looking from the angle of the recipient, we don't use date of receipt of payment. Instead of that, we use date of payment. And then the comparable is 31st day from date of invoice or date of receipt of goods. Now, if you keep writing with me all these which I am writing, you will automatically remember it very well in the next reading, because you are actually creating a summary for each chapter yourself at your own pace. That will help you immensely later on. So, coming to continuous supply of goods. Continuous supply of goods, first of all, when do you call something as continuous supply of goods? The supply is happening on a continuous or recurrent basis, plus periodic invoice is issued. Careful, in this case, the speciality of this is periodic invoice is getting issued. That's when you call it as continuous supply of goods. Now, here we consider invoice date or payment date / statement date, because in this case sometimes a statement is issued giving the quantitative details of the whole transaction. That quantitative details will help us to arrive at the price, and it will be checked by the recipient as to whether he has received that quantity. Say suppose gas or LPG is being supplied on a continuous basis. Then in that case, one statement will be given that this much is the quantity which you have consumed. Then the recipient will confirm that yes, this is the quantity which I have consumed, and the tax has to be discharged on this quantity. So that is the meaning of statement. If statement is not given, then we go by date of invoice or date of receipt of payment, whichever is earlier. So the speciality of continuous supply of goods is periodic invoice. Periodic invoice. Invoice is issued on a periodic basis. That's when we call it as continuous supply of goods. So to sum up, first we have forward charge, then we have reverse charge, then we have continuous supply of goods. Date of payment is considered everywhere except goods forward charge. In that also there are two exceptions, composition scheme and second one specified actionable claim. So this was about goods. Now let's talk about services. Now section 13 deals with time of supply for services. Now time of supply for services can also be of three categories. There can be forward charge, there can be reverse charge, and the last one is continuous supply of service. Now let's understand each of these. Forward charge. Forward charge, the time of supply will be depending on whether the invoice is issued within 30 days. Now say suppose invoice is issued within 30 days from date of completion. In the exam, use the word date of provision of service because that's a better English which is used in the law. You can also use date of completion. In fact, the question may use date of completion. But we can use date of completion or date of provision of service. Provision is when the service is provided. So if the invoice is issued within 30 days of completion, then the time of supply will be date of invoice or receipt of payment, whichever is earlier. Otherwise meaning when it is issued after 30 days from date of completion. Then the law says date of completion or date of invoice, date of payment, whichever is earlier. Why can't we use date of invoice? Because invoice is not issued within 30 days. How can it be used as a comparable? So within 30 days invoice or payment, after 30 days completion or payment. That is how you arrive at the answer. Then reverse charge mechanism. Reverse charge mechanism, the law says date of payment or 61st day from date of invoice, whichever is earlier. Now 61 is used for services. You can remember it this way. Services has more letters, so higher time limit 61st day. Goods have less letters, 31st day. That's how you can easily remember that 31 days is used for goods RCM, 61 days is used for service RCM. You need to be very sharp at this when you are in the examination hall. Because in a bigger question, there will be one RCM adjustment. You will think on whether it is RCM or not. But you should also think about whether the time of supply is arising in that particular month. Because only when time of supply is arising in that particular month, you will discharge the RCM in that particular month. Otherwise, it will be discharged in some other month. Be careful on that. Then, when can you call something as continuous supply of service? When the supply is on a continuous basis, plus the contract is for more than 3 months and there is an obligation to make periodical payment. Now most of the cases there is an obligation to make periodical payments when it comes to continuous supply or construction contracts. Construction contracts is the primary example where this works out. Now continuous supply of service, there can be 3 cases. You basically go by invoice, payment or due date to issue invoice. Now, the earlier of these 3 will be used as time of supply. Now, what's the meaning of due date to issue invoice? Due date to issue invoice can be of 3 types. When the payment date is ascertainable from the contract. Say suppose the contract clearly mentions when the payment has to be made. If the payment date is ascertainable from the contract, then the time of supply will be based on the due date, which is date mentioned in the contract. I'll give you an example which is coming through a circular. Now, let's talk about spectrum allocation. What happens in spectrum allocation? 2G, 3G, 4G, 5G, all these licenses are given by government. when spectrum is allocated, basically there can be two types of contracts. One, upfront payment. Say suppose upfront payment is made, then it's not a continuous supply of service, normal forward charge provisions will be applicable. But what if there is installment payment and the letter of allocation clearly mentions the installment due dates, that this installment is due now, this installment is due next after 1 year, this installment is due after 2 years. If it is clearly mentioned in the contract, then in that case each of the date mentioned in the contract, that will be used as a comparable. We will compare it with invoice and payment date, and whichever is earlier will become the time of supply. Say suppose payment date is not ascertainable. Payment date is not ascertainable. Now if the payment date is not ascertainable, then the law has simply said to use date of receipt of payment. But if you use this DOP, DOP or DOI, you will get the answer of DOP or DOI, whichever is earlier. Because if the contract is silent, then nothing can be used, and that's why the law has just used invoice or payment, whichever is earlier. And the third one is where payment date is based on completion of an event. Now say suppose the payment date is based on completion of an event. I'll give you an example which comes from a circular. National highway contracts are under hybrid annuity model called as HAM. National highway, making of national highway contracts are under hybrid annuity model. Now what happens in this hybrid annuity model? In this hybrid annuity model, at each stage of completion, say suppose 25% of the highway is completed, a payment will be made by government to the concessionaire. Concessionaire is the person who is the contractor who is making that particular national highway. So when that particular payment or milestone is reached, that's when one event gets completed. Like that there will be 4 milestones, that the moment you complete 50% of the national highway, this much will be paid. You complete 75% of the national highway, this much will be paid. So for each of the milestones there will be completion. Now in that case the question is, what would be the due date to issue invoice? The winning answer is date of completion of each event. Whenever that milestone is reached, that will be considered as due date to issue invoice, and based on that we will determine the time of supply. So we will use date of completion of each event, compare it with date of payment, compare it with date of invoice, and we will get our answer. So to sum up, there are totally 3 transactions. One is forward charge within 30 days, not within 30 days, RCM, date of payment or 61st day, continuous supply of service, invoice, payment or due date to issue invoice. Now some critical points. 30 days is replaced by 45 days for banks, financial institutions and insurance companies. So for these 3 we use 45 days and we don't use 30 days. So a higher time limit is given because of the volume of transactions which banks, financial institution and insurance company deal with. That's the first point. Second, whenever there are part payments, there will be multiple time of supply, because for each part payment you have to determine the time of supply separately. Then the question arises, what's the meaning of date of receipt of payment? Date of receipt of payment is entry in the books of supplier or credit in bank of supplier, and then the law says whichever is earlier. This is for forward charge. What about reverse charge? Reverse charge simply uses DOP. Reverse charge, it would be entry in the books of recipient or debit from the bank of recipient, and again the law says whichever is earlier. Correct? Okay. Then the law also talks about up to 1000. Say suppose there is an advance of rupees up to rupees 1000 over and above the invoice. Then the time of supply for such advance will be next invoice date, where it is adjusted at the option of the supplier. That means he can pay when that advance is received, or he can pay based on next invoice date when that advance will get adjusted against the full next invoice. Say suppose in postpaid connections you make an advance of 45 rupees. That 45 rupees will be adjusted in next invoice. This time you have given an advance. Now Airtel or Vodafone or Jio have an option that either they can pay tax based on the advance, that is whenever 45 rupees was received, or the time of supply for that 45 rupees can be next invoice date. That is left to the option of the supplier. Now if nothing is available, then you use date of entry in the books of recipient. Now this entry is the expenditure recording entry whenever the expenditure was recorded in the books of recipient. Plus there is a point of associated enterprise. Now associated enterprise, related persons as per your transfer pricing. The time of supply for this will be date of entry in the books of recipient or date of payment, whichever is earlier. That is in case of associated enterprise, related person, which comes from section 92A of Income Tax Act. Say suppose there is a cessation under a contract. Cessation is contract comes to an end before completion. If there is a cessation, then invoice to be issued immediately upon cessation. Immediately upon cessation. Lastly, there are two more points, like bank can issue one invoice per month, that you learn in invoice revision. Second, between distinct person of banks, financial institution, telecom companies and insurance companies, they can issue one invoice per quarter. So there 30 days will not apply. This 30 days will not apply. What will apply is per quarter one invoice can be issued, because that becomes the due date to issue invoice. Now this is only for service. This is for goods and service. This is for goods and service. This is also for goods and service. 1000 also is applicable for goods and service. This one point is not there in goods forward charge. Otherwise it is mentioned, but goods forward charge doesn't mention this particular point. Associated enterprise is only for services and cessation is also only for services. So that is how each of these provisions are to be dealt in the examination. Next, there are some common points. Common points as in common points like vouchers. What will be the time of supply for vouchers? The law has said if the supply is identifiable at the time of issue of voucher, then the time of supply will be date of issue of such voucher. If it is non-identifiable, that means you are not able to identify, then in that case it would be date of redemption. So redemption date will be considered as time of supply. That's what the law relates to. Then talking about interest. Now interest, the time of supply for interest or late fee or penalty, you can call it by any name. The time of supply for such addition in value will be the date when such addition in value is received by the supplier. The moment it is received by the supplier, that will be the time of supply, because interest on delayed payment of consideration for a taxable supply is liable to GST. If the underlying supply is taxable, then the interest on that will also be taxable. And then the law says any other case. Now, any other case, the time of supply depends on whether the person is required to file periodical return. If it is required to file periodical return, that means we are talking about a registered person. Then the time of supply will be due date for filing periodical return. Due date for filing periodical return. In case of unregistered person, it would be date of payment of GST. The day GST is paid, that day will be considered as time of supply. Now, post this, there is one last discussion, which is section 14, TOS in case of change in rate of tax. Say suppose there is a change in rate of tax, then which rate will apply? Old rate will apply or new rate will apply, and what will be the time of supply? This is given in section 14. Now, say suppose we talk about date of completion, or we will talk about date of supply, because completion is used for services. For goods, whenever the supply is made, it could be removal date, making available date, or it could be acceptance date. Then we have invoice date, and then we have payment date. Now, say suppose the supply was completed before the change in rate. So there was a change in rate of tax from 12% to 18%. Now, before the change in rate, the supply was completed. Or the second situation can be where the supply is completed after the change in rate. Now, there can be various situations. Invoice was issued before the change in rate, while payment was received after the change in rate. Then the question arises, what would be the rate applicable? Whether before rate, that is old rate, will apply or new rate will apply? The answer to this is given in section 14. Let's first complete making all these scenarios. This can be after, this can be before. Then both can be after, and lastly this can be before, this also can be before. And same four scenarios can be there even in the second part. This is before, invoice was issued before the change, while payment was received after the change. Invoice was issued after the change, while payment was received before the change. Both were before the change, and last one, both were after the change. So these are the possible scenarios when it comes to change in rate of tax. There is no ninth scenario. There are only these 8 scenarios which are possible. And whenever we say after, after will obviously include on or after, because say suppose the rate changes on 110, then on that 110 after rate is applicable, because from that day onwards the new rate is applicable. Now the question is which rate to choose. Now you tell me one thing, if there are 2 persons on one side and 1 person on the other side, and there is a fight, who is likely to win? Likely 2 persons are likely to win, sir, and that's what the law believes. wherever two events are, that rate will be used. So the rate depends on where two events are. For instance, before, after. Where are two rates? Before. So old rate, that is 12% will apply. Before, after, before. Again old rate will apply. Before, after. New rate will apply. Before. This is not a case of section 14. It will be made based on 12 and 13, because here all the three events have happened on a particular date, that is before the change. So there is no change in rate of tax. Obviously before rate will apply, 12% will be applicable. Then after, before, after, 18% because two events are after. After, before, 18% because two events are after. After, before, 12%. After, it is not a case of section 14. As it is not a case of section 14, we are not required to worry. Then the question arises, what would be the time of supply? See, time of supply is depending on the date matching with the rate. The date should match with the rate. Say suppose I am choosing, let's start from the second scenario now. This is first scenario, this is second scenario. Let's start with this. After, before, after. So we are taking the after rate, that is 18%. Now date of supply is not considered as time of supply, because that particular date of supply date is not used until and unless there is a deviation. So we don't use date of supply. Now 18% is being used. What should we use as time of supply? If we use date of invoice, then it will be a clash, because we are using 12% one, but actually 18% rate is applicable. So the time of supply will be date of receipt of payment. Second case, two events are after. So we have to choose a 18% one, and by default the answer will be invoiced it. Now here two events are before, invoice or payment. Now here it doesn't matter whether we choose invoice or payment, and that's why the law has said date of invoice or date of payment, whichever is earlier. And then coming to first part. Now before, after. Two events are before, you will use date of invoice. Here you will use date of payment. Both are after, you will use date of invoice or date of payment, whichever is earlier. So this is how you derive the time of supply under section 14. But be careful about one point. See, for goods industry, government has said by notification number 66/2017 that date of receipt of payment will not be considered as time of supply, which is applicable even for section 14. So for goods industry, the time of supply will always be date of invoice. But whenever you are writing an answer, write invoice or payment whichever is earlier, and then you say notification number 66/2017 has said that date of payment is not considered as time of supply. Mention that particular point. That's the most important aspect in your examination. Now, in goods industry, there can be a case where you are using the rate which is different from the time of supply, because time of supply by default in goods industry under section 14 will be date of invoice, because payment date is not considered, supply date is not considered. By default, date of invoice will be the time of supply. But please don't write it directly. You write date of invoice or date of payment, whichever is earlier, and then you mention that as per notification number 66/2017, date of payment is not considered as time of supply. If you are directly getting date of invoice answer, then go by that anyways. But there can be a mismatch in case of goods. Finally, there is one important point, date of receipt of payment. It is entry in the books of supplier or credit in bank of supplier, and the law says whichever is earlier. Correct? Now, what about a case where there is some cheating done? Say suppose here change in rate happens and invoice was here, completion was here, payment was received here. So old rate will apply or new rate will apply? Sir, new rate will apply because two events are after the change. Now some people might change the date of payment because it says entry in books. We will change the entry in books to be a date before the change in rate of tax, and we will get an advantage because date of receipt of payment is entry in books of supplier or credit in bank, whichever is earlier. Now, to have a check on this, government has said if the credit in bank, listen to me very carefully, if the credit in bank is after 4 working days, if the credit in bank is after 4 working days from change in rate of tax, then DOP equals to credit in bank. That means government will ignore your entry in books and date of payment will be considered as credit in bank. Very important point. You read the entire chapter very well. If you don't read and go this one particular point, question might be asked only on this particular point where there is a change in rate and credit in bank is after 4 working days. So be careful about this transaction. Let's quickly sum up what we have discussed in time of supply. See, first of all, time of supply, we dealt with 4 provisions. Section 12, 13, 31, 14. 12. Forward charge, we saw invoice or due date to issue invoice. Reverse charge, 31st day or date of payment or receipt of goods. Continuous supply of goods, invoice or payment or statement, whichever is earlier. When do you call it as continuous supply of goods? When there is periodic invoice. Then we moved on to time of supply for services forward charge. In time of supply for services forward charge, we understood that if the invoice is issued within 30 days from the date of completion, then invoice or payment. If it is issued after 30 days, completion or payment. RCM, date of payment or 61st day from date of invoice. Continuous supply, invoice, payment or due date to issue invoice, which can be based on ascertainable, not ascertainable and based on completion. Ascertainable, we understood a circular on spectrum and payment date based on completion, this HAM contract. Hybrid annuity model where national highways are being made. Then some important points like 45 days, part payment, multiple time of supply, date of payment definition, date of receipt of payment definition, 1000 if the excess payment is up to 1000 over and above the invoice, then next invoice date at the option of the supplier. Nothing available, you use entry in the books of recipient. Associated enterprise, entry in the books of recipient or payment date because they might not issue a invoice amongst themselves. Cessation, whenever there is a cessation, we use invoices to be issued immediately upon cessation because the contract has come to an end before completion. Then you will not wait for 30 days to issue a invoice. Vouchers, interest, any other case was simple. Voucher, identifiable, you use date of issue. Non-identifiable, you use date of redemption. Interest, when such interest is received. Any other case, registered person, it will be due date to file periodical return. Unregistered person, date of payment of GST. Then we dealt with section 14. Wherever two events are there, that will be the time of supply. And the rate has to match with the date. But for goods industry, as date of payment is not considered, there might be a mismatch, because as DOP is not considered, it will be based on invoice. Then DOP is defined to be entry in books of supplier or credit in bank of supplier, whichever is earlier. But whenever the credit in bank is after 4 working days from the change in rate of tax, then date of payment will be credit in bank. So see you in the next video. Bye.